Good afternoon and welcome to the Light Science Technologies Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Simon Deacon. Good afternoon to you, sir.
Thank you, Alex. Good afternoon, everybody. Welcome to Light Science Technology Holdings company update for September 2023. Presenting today is Andrew Hempsell, Chief Operating Officer, Jim Snooks, Chief Financial Officer and Company Secretary, and myself, Simon Deacon, Chief Executive Officer. I'd like to run through the group overview of the three companies within Light Science Technology Holdings. As you know, we've got a new acquisition we did in September, which we announced recently. So we've now got three companies within the group. UK Circuits, based up in Manchester, which was established in 1997 and is in contract electronics manufacturing, the CEM. And we service multiple business sectors in that market. We have Light Science Technologies, which is part of our CEA division, Controlled Environmental Agriculture, where we've got award-winning products in lighting and lighting recipes, and also sensor technologies and a whole array of different products, which we are amalgamating now with Tomtech. Now, Tomtech, which is a recent acquisition, was established in 1986. It's a UK leading in its control systems for commercial greenhouses, and it really puts us on the map in our CEA division, and we're really pleased to announce that we've now secured that, and it's part of the group. So let's have a look at the market opportunity and where we are to date. We've got a combined group pipeline and forward order book of 40 million pounds. The group's forward orders and contract value is 16 million. And our pipeline and forward orders together is 40 million. So we've got good visibility going forward, which is really pleasing, especially in challenging market in the CEA side of the market. We're established in the controlled contract electronics manufacturing side in UK Circuits. We've got an opportunity there globally of 2.3 billion. And we do see that market growing, which is really pleasing to see. And we've seen that in UK Circuits, that the market is growing and we've got growth from that market. Everything we see today does have electronics in it. We touch and feel. If we use our remote controls or our phones, there's always electronics in everything we seem to touch these days. So we see a growing market there. In the Controlled Environment Agriculture and our CEA division, with Tomtech and Light Science Technology, there's a global opportunity of 29.9 billion, just under 30 billion pounds. And what we've done here is we've broken that out. So it's a big number. And so we've broken that out on what we're focusing on. And that focus is on grow lights. We've got a recipe of lights that we have designed and produced, which I'll talk about in a bit, which is 1.7 billion and is growing at 21.1% CAGR. So it's good growth and lots of potential there globally. In the agriculture and sensor part, as you know, we've developed and got trials on our sensors. The market size is 2.1 billion and is growing at 11.4%. So that's also growing at a good rate. And we see a lot of potential with our sensor growth, especially as now costs of producing produce has shot up globally due to energy crisis and other factors. So we see that as being a really key part of moving forward in the agricultural sector. The other side is the global control systems, and this is really where Tomtech comes in. We've got 3.75 billion market opportunity there, and bringing Tomtech into our group and having a good solid control system, which they've been running for over 30 years, really gives us an opportunity for a turnkey solution, which I'll come on to. And that area of growth is growing at 7.4% CAGR. So what's the growing trends in the market for our two key areas, contract electronics manufacturing and the controlled environment of agriculture? If I start with UK circuits, and what we're seeing in the marketplace is onshoring back to the UK. We're seeing a lot of this, and we've seen a lot of growth in that, but also driving a lot of quality. There's a lot of electronic manufacturers out there, and customers are looking for that turnkey solution where you can build product in-house and drive that quality of costs. And also the access, as we know, there's been a global shortage of components around the world, and having that access to those components is key. And with UK Circuits, really good reputation with its suppliers, it's managed to keep good access through the market where it's been challenging and see growth through that. In Light Science Technology and Tomtech, we all hear about cost of living. It's had a massive impact on the CEA market. In energy is one of the obvious ones, but everything else has gone up. Fertilizer costs, water. We've also seen nutrient rising costs, moving produce around, seeds. Everything has gone up. So having our sensor products is a really important part of that. Soil degradation is key as well, not having the land to grow in. But the big impact really, which is happening for the global trends, and we're seeing in most places around the world, is climate change and the extreme weather patterns we're having. More growers who are growing outdoors are bringing their crops indoors, and that's purely to see that they can actually control the environment and grow the crops and get the yields that they need. We've all seen the fires, the droughts, the flooding that we've seen. Greece is a good example, and Turkey recently, where they've had a huge heat wave, and then suddenly they've had enormous amounts of floods. And you can't grow in that environment outdoors. So being able to grow indoors is really the solution for everybody globally, and that's what we're seeing with clients. They want to grow indoors. Water shortage. Water shortage is going to become a bigger problem globally, and we're seeing how we can control that. And obviously growing in an enclosed environment, you can control the water that you use, and especially in vertical farming, you use a lot less than you do in outdoor farming. Dietary shifts and also growing population. We are seeing a dietary shifts. People are eating better, eating more healthily, and so eating more leafy greens, salads, and so forth. And obviously we've got a growing population till 2050. So let's just have a recap on the products in the CEA division. I think it's really important to see, what have we been doing and what are the key products in our product suite now. Nurture Grow, which is a lighting product. What does that do? What does it stand out from everybody else? Growers are now learning more about the recipe of light they require for different species of crops that they're growing, and can they change the crop recipe of light, so that if they change the crop, can they change the light, which we've designed, and we've designed it for glass houses, polytunnels, but also for vertical growing. So they've got a really, you can have a light which is produced by the stalk of the plant as well as on top of the plant. And our key factor from changing from everybody else, our product is reusable. So when it comes to the end of its life, you can keep the body of the product and reuse the body and put new electronics in it. And associated with our manufacturing facility at UK Circuits, we can remanufacture the lighting and the electronics to go into those products and service our customers. So it's creating a long-term partnership with our clients. The Sensor Grow and collecting sensor data. This has become really important to collect CO2, nutrients, heat, humidity, all the factors to having the perfect environment. How do you control them? How do you get that data? There is other sensors out in the market, but where we stand out from our competitors is really having a product which doesn't require heavy amounts of infrastructure, less cabling. Ours work on batteries, so you can move our sensors around your facility accordingly. And they can work up to 10 kilometers away from the device that they're sending the signals back to collect the data, which is really important. We refurbish these, so it's an ongoing partnership with the client after 12 months where we charge the battery on their behalf, refurbish the product and put it out in the field. It's a really important product to collect the data. It's a growing product range, and eventually we hope to get that out in open agriculture as well going forward. So really exciting product that we've got going there. And hopefully over time, we will see that also producing AI technology, so it's more automated throughout. Advanced grow, semi-automated crop care. We're seeing obviously a huge labour shortage in various countries around the world, but also, the cost of labour. It's not just a shortage, but the cost of labour. So how can we reduce the cost of growing and the picking of this? So having something which is automated, where you're putting light over the product, where it can harvest the product for you, where it can plough and set the seeds, is something we're working with part of a UKRI grant and a Zenith contract, and that continues through its phases. As I mentioned, we've bought Tomtech, which gives us an added suite of products for our customers. Really exciting suite of products. But what all these product range does for our company as a group in the CEA division is create a turnkey solution in the market. So we can offer a full package or we can offer part of a package. And I'll come on to more of the Tomtech products throughout the slide deck. So turning to contract electronics manufacturing division, we're seeing growth in this area. And Jim will come on to the financials shortly. But it's really important. We've invested a lot of money in training with staff and also in making sure the equipment is at the right standard to really pivot and get the next tier of client in place. People like Rolls-Royce is people that we want to work with and partner with. As well as all the other ones that we've got and longer standing clients like Rentokil, Switch2 and Cloud. The CEM division is really important because we're not stuck in one marketplace. We produce products for all sorts of industries, from lighting, fire industry, music, pest control. So it's a real wide range of products that we are producing on behalf of our customers. And we see a really good drive going forward, making this business more profitable, but also increasing the revenue as we move forward. I'd like to hand you over now to Jim to go over the financials.
Thank you, Simon. So if we can start with the group revenues, which are predominantly generated by the platform business, UK Circuits. As Simon's just explained, that's our manufacturing core that's in the contract electronics manufacturing sector. And we've achieved a growth of 22% for the half year, from half year 22 to half year 23, from 3.5 million just over back at half year 22 to 4.4 million just under half year 23. So a solid growth performance, given what is an easing market. Alongside that revenue growth, we've also improved the gross profit margins, which were sitting at the 17.7% for financial year 22 and have gone back up to the 20.9%. And that reflects an easing of the CEM supply chain and also stability in pricing, where we've been able to align much more easily with customers' cost side to revenue side. On top of that, the investment that we've put in up at Manchester at UK Circuits is showing through. We've invested in plant and machinery, automating and making it more sophisticated. And those efficiencies are also pushing that gross margin in the right direction. We took the decision towards the end of last financial year and moving in this year to realign our cost base, which has been really important. We've achieved a 20% reduction in overheads through the first 6 months of this financial year. And what that's done is delivered an improved EBITDA. You see from the numbers on the slide that this time last year, half year 22, it was an EBITDA loss of just under 1.1 million. We've moved that down to just under the £500,000 mark. Still, obviously, a way to go in the right direction, but very much following in line with our company policy there. Alongside that, the cash burn has reduced significantly. Net cash from operating activities sitting at the half year 22 mark was just under a negative 1.3, and that's reduced to just under 200,000. So really pleasing to see the policies that we've taken on the cost realignment alongside the revenue growth and gross profit improvement, seeing that through down to the bottom line. And indeed, the bottom line loss before tax has reduced to 0.8 million for the 6 months. That's a 37% reduction from the same point last year, where it was sitting at 1.3 million loss. So, you know, what is our group policy, centre plank of our group policy? It's really to become profitable and cash self-sufficient. And, you know, very much we're moving in the right direction thus far up to the half year point. So turning to the balance sheet, there's been further investment in development in the CEA sector, the controlled environment agriculture sector. A further 130,000 has been developed through the first 6 months of this year, predominantly in our advanced grow product. Looking at non-current assets, fairly stable picture. They comprise our properties, plant and machinery, fixtures and fittings, reflects the investment in UKC within those numbers, but pretty stable. We undertook a fundraise through the interim period, and really that's providing a good cash platform for us to continue the progress that we've made in the first 6 months in terms of moving towards profitability and cash generation. So, you know, it was a good platform for us to move forward with. Non-current liabilities reducing very nicely over the 6 months, reflecting the pay down of banking facilities, the term loan, and some of the HP agreements that we've got there. So very much moving in the right direction. Looking forwards, you know, I've mentioned that, you know, it's a key centre plank of our group policy to move to profitability and become cash generative. You know, to that end, we're actively reviewing opportunities, both organic and acquisitive. And, you know, TomTech is one such move in that direction. To that end, I'll let Simon give you some more detail on that particular opportunity. So I'll hand back to Simon.
Thank you, Jim. So we're really pleased that we had our new acquisitions, our first acquisition since we've been on AIM. TomTech was acquired on the 5th of September. And it's a business which is longer standing in the marketplace, founded in 1986, so well over 30 years of experience in the controlled environment of agriculture. For us, that really puts us in a lot more prime position in the glasshouse and polytunnels and labs around the country. TomTech very much supports and deals with customers who are in England, Scotland, Wales, and Ireland. and they've done the odd project down in South Africa as well. So it's a growing business. It's grown year on year. It's cash generative. We bought the business for £500,000, and we are paying that over a period of 30 months. So it's a good, solid business with a lot of synergies for us. And the main synergies are having a control system and software. As you know, in light science technology, we have lighting and sensors and our own software. But with TomTech, they have their own designed control system. And so all of these items, if it be motors, sensors, vents, control system, irrigation, they all go back to a central point. And years gone by, they were all hardwired back into this central point in this control system. And then from there, what you would do is monitor your environment that you're growing in. And out of that, items would change. So vents would open, heating would come on, lights would go on if it goes dark. Where we'd like to see this is really use the TomTech name, but also use their product suite of products that they have in irrigation, the motors, the venting, and their control system. Modernize that with including into our software, which is really important, so that you can then use it on any device, if it be a laptop or an iPhone. And we see the importance of controlling your environment even more so now than we did 5 years ago, due to the changes happening globally through the weather patterns, but also the cost of producing product now. It's become more important to control those costs and monitor those, and so that you can not just increase your yields, but save money while you're producing them, and you can understand them. TomTech have got a database of over 1,000 clients that they've serviced over the years, and 150 live clients currently. And for us, the synergy is bringing in our products into their client base and revisiting that polytunnel and glasshouse. And what we're seeing in the market is, refurbishments of those glass houses and polytunnels. Polytunnels and glass houses don't last for forever. They need refurbishment. And so they don't necessarily have to be a new building, but the refurbishment of those and bringing in our technology to these growers is really important. And so we want to bounce off their customer base going forward, and vice versa, TomTech's products into our LST products and customer base globally, where we can offer that turnkey solution I mentioned earlier to clients who might be growing vertically or in glass houses. So it's really important acquisition, a well-established name, and they also do maintenance and refurbishment with an installation team as well. So they've got the full suite of what we need to create that turnkey solution. So looking at the products and the offering that we've got and the synergies is on the left-hand side, on the bottom left, you'll see a control panel and what it looks like, the control system looks like, with, as you can see, electronics and wires in there. And obviously, at the moment, TomTech either sub out the manufacturer of their product or make some of them in-house. We'll obviously be able to bring that in-house, all of that manufacture in-house, with our arm at UK Circuits, to be able to manufacture a turnkey product for them. And so that really gives us strength to have the full control of manufacturing the product in-house and be able to deliver it. On the vice versa, the lighting going in, they buy lighting into their customers at the moment. So our competitors' product, they'll be able to sell our lighting into their customer base and offer that unique reusable product with the correct recipe, which is really important. Having these products really does give us in the CA market a good advantage going forward. I can't say it enough that TomTech's name in the market is very strong, well-established business, and it really puts us in the forefront going forward. So really pleased about the progress and the synergies going forward. and working with the team there. They've got some really clever staff in TomTech who have been in the controlled environment of agriculture for a long time, and bringing our staff in LST together with them, I believe we've really got a good, strong future in the CEA market going forward. So having a look at the group's focuses going forward, what we're focusing going forward, it's really important that we increase our margin. We've seen that in the last 6 months that we've achieved that, and we want to continue doing that. And that's by buying better, being more efficient in our factories, going forward. So increasing that margin is really important. Also increasing revenue and continue the growth that we've managed. It's really pleasing to see that we've grown by 22%, in a challenging market, both in the CEM and in the CEA market, that we're managing as a team to continue that growth. We continue to reduce overheads till the end of the year. We've successfully achieved that so far in the last 6 months, but we want to continue that. So monitoring the overheads, reducing where we can, where we see an advantage to do so. Being cash generative is important to every business, and moving forward to achieving this is really important to that. So as we see profits increase and revenue increase, we will become cash generative, and that's our real focus for us as a management team. We continue to launch and develop products so that we can create partnerships around the world. It's really important that we keep developing our products, especially in the sensor technology and the control systems and software to bring AI in. So we're focusing on bringing those control systems in and launching those products so we can get a broader reach globally. We will certainly be, making sure that the TomTech product range is out there in the market in the countries like Australia, the Middle East, and Americas, where we see really good potential growth in those markets compared to what we've seen in Europe. Creating those global partnerships is important to us, and to be able to establish our name out in different parts of the world where they haven't got as many challenges as we have in Europe. So we'll continue to focus on those, and hopefully we'll have some good announcements coming up in the future, in the short term, to talk about those partnerships. Improving efficiencies in the manufacturing division. As I mentioned, we've invested in that company, and we've seen the returns by making that investment. So we continue to modernize, automate, putting software in, training staff, and we see those, that investment really coming and seeing that in the margin that we're producing. So really important. Integrating TomTech, exploiting economics of scale, really important to us. As I've mentioned, their product suite, our product suite, and the knowledge that we've got between both companies really now sets us apart moving forward, and creating those global partners to sell our products through. I think we will see some good growth opportunities. Actively exploring cash generative acquisitions. We're always looking around for opportunities. We've seen a great deal in TomTech that we've acquired in the CA market, and we'll continue to explore other opportunities in different markets as well as our own to create that cash generative acquisitions going forward. So they're not just growing organically, but also through the acquisitions. So just to summarize the group, where we are and what we've done in the last 6 months, we've got a great global opportunity in the CEM and CEA side of the business with over 32.2 billion globally. So early mover advantage there. We've got a strong forward order book and contract potential of £16 million in both divisions. We've got a strong pipeline of opportunity of 40 million in the CEM and the CEA divisions. So it's really important that we keep strengthening that pipeline, keep building that forward order book, and we continue to do that. We've seen good revenue growth in the last 6 months of over 22% compared to 2022. And we've also seen increasing in margin from 17.7% to 20.9% in the same year. So the things that we're doing are taking effect, and we're seeing those in the results and the financial figures, which is really pleasing with the team that we've made that progress. Overhead reduction, Jim mentioned it earlier, we have focused on that and we continue to do, and we've reduced the overhead so far by 20% in those 6 months. We continue to develop products, our Nurture Grow and Sensor Grow. Those products are being tested with trials in all sorts of different countries now, and different clients, from vertical growing to glass houses. So it's a good spread of products that we're testing out in the market, which then will lead through that pipeline of 40 million to come into forward orders. The TomTech acquisition being our first on AIM, we're really pleased about that, and we continue to look at other opportunities and synergies and bringing companies together. So we feel that at the moment we're going in the right direction, and we're growing and increasing those margins, and we continue to do so for the next 6 months. Can I hand back now to Alex and any questions that you might have?
Perfect. Simon, Jim, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Simon, Jim, Andrew, as you can see, we have received a number of questions throughout today's presentation. And Andrew, if I may hand back to you to chair the Q&A, read out the questions that are appropriate to do so, and I'll pick up from you at the end.
Thanks very much, Alex. Hello, everyone. We've got a couple of questions expanding on the TomTech acquisition. So first one is, how long will the integration of TomTech take into the group? In reality, there's minimal operational integration required. We want that team to run the business. It's not our style to go in there, all big brother, and putting process on them. We want them to run that business. We see it as our role really to give them the tools to do their job. So the main areas of integration, as Simon was talking about, really relate to kind of, moving the product manufacture to UK circuits. Sort of that allows that team then to focus on the bits that they're good at, and then TomTech taking on our lights and our sensors, and then from the LST side, giving them access to the sort of, we spent around £500,000 on the software security sort of app side of the sensor. And as Simon was saying before, most of their products are hardwired. This would give them another dimension, really. The next question is, will the TomTech acquisition expand your market reach significantly? I think one of the reasons that we did it really was, with light purchases, you're only buying lights every 5 to 7 years. So if you're on the sort of commercial side, you're phoning up the grower saying, how's things going? When you're looking at your next lights, in another 7 years, that phone call in another year is going to be exactly the same. Yeah, in another 6, it'll be another 6 years before I need lights. And by the time that you get to 7 years, the contact's probably left and you're starting all over again. The good thing about TomTech is they're literally in the glasshouse doing the venting, doing the control systems, doing the irrigation, all sorts of different facets at a time when the glasshouse are revamping. So they're in the perfect place, and they do get opportunities when they're there for, could you do this while you're at it? So it gives us that opportunity to relationship build, have a reason for more contact with the growers than once every 7 years. The other side of it is then, we'll have proven case studies. They're 37 years old. So we'll have both proven case studies that we can put in there, and both companies are going to have an enlarged product portfolio, and 150 existing customers to go at to start with. This is one probably, Simon, you could take, is relating to sort of what opportunities in the CEA division are there in sort of Australia, Middle East and Americas, and are we well capitalised to play on them?
It's all part of creating partnerships globally is really important for light science technology. Australia is an interesting market. They're really into their tech and having technology to control their environment. So I think there's great opportunities in Australia. In Middle East, we can see the challenges there, that the ground, when we look at soil, etc., is having the ground so that if you can grow internally, you can stop the imports, and that's what we're seeing in the Middle East. So Australia is about having the technology. They thrive on having technology. In the Middle East, it is more about not having the ground to grow in, so creating that CA side and the vertical farms which are being built out there, and having the control systems and the lighting recipes, and we continue to quote in both of those countries. In Americas, really huge area to cover, but we've been doing quotes in Colombia and Brazil, in Centre of America as well. So really that's all sorts of produce, from tomatoes to growing flowers, to growing leafy greens. So it's a real wide range of crops that we're looking at to support technology in growing. So there's great opportunities there. Some of our largest quotes come from America, and building glass houses there, and putting the technology in them. So we keep pursuing those markets, and creating those partnerships to support those customers is key for us going forward.
Okay, thank you. We've got some questions on the CEM division now. So somebody's asking what the outlook for the CEM market in the UK and globally. And the CEM market's currently growing around 11% a year. Most importantly, as Simon alluded to, the global chip shortage is not over, but it's getting a lot better. The situation's easing, and this will really help sort of our stability on margins. But I think what it will do is it will reduce the length of forward orders back to more historic levels, where we would get, say, forward orders of 3 to 6 months instead of 6 to 12 months. But I suppose it's not going to reset the clock back, because I think the big change is the reshoring, Far East reshoring. We are seeing that quite a lot, with increased transport and things like that affecting China. That differential between the two manufacturing, particularly the more automated you make something, there's less labour to save on. That gap's narrowing all the time. So that's the big opportunity really, and that's why we're doing a lot of things around automation in the factory on the SMT side particularly.
That question, Andrew, from Charles, it also says, is there opportunities in the CEM similar to what there's been in the CEA, i.e. the TomTech acquisition? And I think the answer to that is there certainly are. CEM is quite a fragmented sector, and there are targets there that in time might be attractive to us, and we will be seeking those and reviewing those accordingly.
Thanks, Jim. And then how are you protecting your margins in the CEM market? The team there have done a really good job in terms of working with the clients. We work very transparently, often on an open book basis for the bills and materials. So what we're able to do is, in a quite a short window, but we go to the market, we come back, and we kind of confirm this is your price, this is your lead time, which then protects our margin. Obviously, the longer your distant orders go out, if somebody's placing 12 months of supply, we don't really necessarily always purchase everything up front, because that would place crazy challenges in terms of cash flow and things like that. So then you are a little bit exposed, which hit us last year a little bit. But yeah, that's where we're at. We're kind of in a situation where we are working with them. We are kind of in control, as long as we're communicating efficiently. Simon, one for you. Is it expected that the CA market will remain the main revenue generator for the foreseeable future?
I think in the medium term, the answer is yes. The company continues to grow, which is really important in the CEM market, and the market's growing, as is the CEA market. So we will see a turn, but I don't expect it to be in the short term. I think in the medium term, we will see a turn where both sides of the business are doing equal, and then eventually the CEA side taking over from that. But at this stage, in the short term, definitely we will see the CEM continue as is and continue the growth.
A couple that have just come in. Do you have lock-ins in place for the senior team from TomTech? Yes, we do. I mean, Jim, do you want to clarify that a little bit more?
Sure. Yeah, we've given quite an incentive scheme really for the senior management at TomTech to stay on board and to achieve, a combined group target that will, generate what we're looking for as a group, but also, the senior management involved will be incentivized and gain from that too. So, we've had a very positive start post-acquisition from the team. They seem very engaged and, they will be rewarded accordingly.
The one on, does LST have AI expertise in-house already, or will it need to recruit it? We did a project, finished it about 18 months ago, which was a 2-year project with Nottingham Trent University, where we had a data scientist for 2 years working on AI. And what they were able to do is very accurately forecast the growth of a plant in certain conditions over that period of time. But with AI, you need a huge amount of data. So we really need to have lots of sensors out there. So it was almost a feasibility study. Will this work? The results were fantastic. Go away, gets loads of sensors in place. So we're getting that data coming in, and then we will then revisit the AI side of it. So what we're doing, and also the other thing at the moment is, while we haven't gone totally down the AI route, it's quite a departure from where growers are at the moment. We quite often hear the story of, well, I go around and touch the leaves and I know exactly where I'm at. So to try and get from that mindset to everything's going to drive you through a dashboard without you even touching it is a way to go. So we're going in a halfway house with the sensors at the moment that are out in the field, where they give them data to allow them to control what's called vapor deficit environment, so that they keep their readings within a certain area. Vapor pressure deficit. So that's what we're doing with them at the moment. So then when AI comes in, they're already halfway kind of trained to that mindset, if you like. So I hope that answers that one. Couple on the finance side, Jim. Is revenue growth a priority for management?
Yes, revenue growth is important because if it's at the right margin, obviously it generates the contribution that drops down to the bottom line. But I would add that, revenue growth at any cost is not, the top priority. We're very much looking at turning into a profitable company and therefore becoming cash self-sufficient as we move into that area. So revenue growth important, but I would say not at any cost.
The next two questions kind of lead into each other. So I'll start off with you again, Jim. Are you looking to do another fundraising by issuing more shares?
So if we were looking to do another fundraising, it would be on the basis of an opportunity that had arisen that we'd need to raise those funds for. So, for example, if a very attractive acquisition opportunity arose and we needed to look to the market to raise the funds to do that, we would obviously consider that. However, operationally, it's important to us, as I've said, a number of times, that, the group becomes cash self-generative in its own right. And, that is certainly the aim, but we would definitely consider raising funds if the right opportunity arose.
Well, that goes on to the next question quite nicely for Simon. So what can you tell us if are there any more acquisitions in the pipeline?
I think we're always looking for good opportunities in the marketplace. The TomTech deal was a good deal for us, and how it works and the mechanics of it, as well as the products and the name in the industry. I think if we can see other opportunities, out there which are creating cash generative and not going to affect our cash runway, then we'll certainly be looking at those opportunities going forward. So yeah, absolutely.
Okay. I think that's it, Alex. I think that's all the questions covered.
Perfect. Andrew, Simon, Jim, thank you for that. I think you have addressed those questions you can from investors today. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Simon, could I please ask you for a few closing comments?
Thank you, Alex. We're looking forward to the rest of the year, continuing growing the business and the margin, working with the team at TomTech, the new acquisition, is a really exciting position to be in, and being our first on AIM as well, and also creating those global partnerships, which will then give us the opportunities to spread our brand and our product suite in both TomTech and also Light Science Technology. So looking forward to the future. It's exciting times for Light Science Technology Holdings and the team within it.
Perfect. Simon, Jim, Andrew, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Light Science Technologies Holdings PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.
Okay.
Thank you.